Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. The title of this video is How to Trade Highly Volatile Securities. Alright, let's get started. Alright, we can decide to trade, okay, during the volatile periods, or we can decide to trade after the volatility is finished. Alright, so today is what we call the non-farm employment change, a very volatile day because of the non-farm employment change economy news. Check forexfactory.com and you will see that at 1:30 p.m. London time, 8:30 a.m. Eastern time, we have what we call the non-farm employment change, a very, very volatile economy news. As always, a lot of traders, especially new traders, who do not know anything about this volatile economy news may wipe out their trading accounts. All right. So I want to show you here how we can trade. So we can trade, okay, as the economy news is about to be released, or we can trade after. All right. I prefer to trade after the news is released. So the volatility has settled, okay, and the market is now trying to adjust itself or to correct itself because a highly volatility environment will distort the financial securities. All right. One thing that I say to traders, the normal direction of the price is diagonal. So if the price going down, you see it go up like this. If it's going down, you see that it go down like this. But when we see the price going vertical, it's a distortion. When the market is distorted, okay, it will rectify itself. So I have here some drawing on my chart, and I want this video to be 5 minutes recording. So I'm going to go a little bit far. So how do we trade after the economy news is released? Okay, once the economy is released and the candlestick bar is closed, if you are day trading, okay, we will go to the hourly charts. If you are swing trading, we want to go to the daily chart, okay, for this particular trading strategy. All right. So here, somebody who is day trading will go to the hourly chart after the volatility is settled. He or she will see a vertical, okay, tall candlestick bar, okay. So what you need to do, you need to highlight the low, the high, okay, and also the median line of the distorted candle on the hourly charts. So price goes down, you highlight the high, the low, and the median line of the distorted candle on the hourly chart. If you were on the daily chart, you will do exactly the same thing on the daily chart. The pattern that we see very, very often, all right, is that the price will go down like this, all right, and then you start going diagonal, which means the volatility has settled, and then you start going down diagonal. You will look for opportunity to buy as soon as the common central line along this move that is diagonal is kaput. So price will go diagonal after vertical move, diagonal move, which means the price restoring itself. Okay, as soon as this common central line is kaput, you will buy. The opposite is also true. When the price rally up after the distortion, we will highlight the high, we will highlight the low. Powerful stuff. This is my own proprietary tool that I'm sharing with you, all right, because you are my friend. And we'll also highlight the median line of the tall candle, either on the hourly chart or the daily chart, all right. And you will see that, okay, the high, the low, and the median line. And also we will, okay, you see now, and then when the price, sometime the price will go into normal progression. You go diagonal move is a normal progression of the price. Then the price will go diagonal like this, and then as soon as this common central line is kaput, we will sell down. This is how one can trade a highly volatile, okay, security. All right. Sometimes the price may not display the diagonal move, so it will stop here like this. Very often, if you see that, the price will try to rally up to the 50% Fibonacci retracement level. If the price comes to the 50% Fibonacci retracement level, okay, we will look for opportunity to sell. If there is an opportunity to sell using the trading drill, the setup, the signal, and the low risk entry point, we will not sell just because the price hit the 50% Fibonacci retracement level. On the other hand, if the distortion, okay, is bullish, the price rally up like this, sometimes you may not see this normal, okay, restoration of the price. Okay, the price will stop here, and sometimes the price will pull back, okay, to the 50% Fibonacci retracement level. If you hit the 50% Fibonacci retracement level, look for bullish pattern on your signal time frame, and we'll look for opportunity to buy here. But very often, the one thing you need to understand is that after the distortion, the market want to rectify itself. So be careful. What we meant by the market want to correct itself, it means that the price, okay, want to cancel the distortion, which it want to bring it back to the starting point. And it will do that very often. You see that the price will come to the 50%, people will try to sell, but the price will try slowly, will come back and cancel the distortion. So remember, the ultimate goal of the market after the distortion is the cancellation or the correction, bringing the price to total retracement. I prefer this strategy after the economy news. Okay, and then we see this normal move and the common center is broken. You sell, you can take profit at a high, and then look for another opportunity to sell, take another second profit on the 50% level. Sometimes the price may not cancel the distortion completely, but we'll find a support at the 50% level. If the market is bullish and is supported by fundamentals, okay, factors. All right? It makes sense? If you want to know more, go to www.stochasticmarket.com, click on today page, and watch this video here, non-farm day trading tips and tricks. Another one here, ADP non-farm chicken forex and stock trading. These two videos will clarify what I'm trying to say to you within 5 minutes. I've been recording this video now. Hold on a second. Now I went over my limits. Okay, so I'm going to push it to 10 minutes. All right. So let's go back to what I'm trying to explain to you. So here we have the Euro Swiss francs, which was distorted recently because of the SNB, the Swiss National Bank decision to unpeg, okay, the Swiss francs against the euro currency. Though I'm using a currency pair here, this strategy is valid to all financial securities, okay? So we are on a daily chart this time, okay? As I'm telling you now, what do we need to do? There is a high chance that the market slowly but gradually will correct the distortion. One thing I forget to tell you, when we are highlighting the candle that is distorted, we will highlight only the body of the candle. You see here, this candle has a tail. We will not highlight the tail section. We will only highlight the body of the candle. You see here how I draw it here. The candle went all the way here, but I highlight only the body, the low of the body, and the high of the body, and the median line of the body. That's the pink line here. You see the price coming near the 50% level here. All right. The ultimate goal of the market after this distortion is to bring the price back, okay, to the starting point. It makes sense? The correction, because this is a distortion, slowly but gradually the price will come back to this point, to the level of 120. At one point, by all means, we see all the time. It may take few days, it will take few months, it will come back to the starting point. All the time. It's a fundamental principle of the market. After a distortion, the market will rectify itself. So today is a non-farm employment change. You will see that many currency pair, especially the Euro USD, the pound dollar currency pair, the major currency pair, will be distorted. Okay, so one thing also I need to say to traders, if we want to trade while the economy news is released, we must enter the trade 1 minute before the economy news. 1 minute before economy news, and the tool, the trading system that we can use is the RTS 315. Go to www.stochasticmagic.com, subscribe for free, relog in for free, all right? And then click on documents. So you will click on documents, okay? It's a free trading system that I put here for traders, for trading the high impact economy news. Yeah, this is it, document. Click on document. If you click on it, you'll see to you to enter your it will tell you to enter your email and your password. Because you are not yet already member, all right, you will click, okay, you see here, not yet a member, so register now for free. So you will register first for free, and then you will relog in. You click on document again and relog in for free, and then you click on the RTS 315 trading system. This is my first trading system, so I'll give it for free, and you can use it on the 3-minute chart. So you will enter the trade 1 minute before the economy news. You will enter the trade on a 3-minute chart, not 5 minutes, not 1 minute, not 2 minutes, but on a 3-minute chart. You enter the trade 1 minute before the economy news. But if you want to know more, you need to click on today's page right here, which I tell you now, today's page, to understand how we trade this. Like I'm showing you now for the Euro Swiss franc, okay, you see it dropped down. We highlight the body, the high, the low, and the median line of the body of the distorted candle. All right, okay, it makes sense. It's powerful stuff. You want to know how to trade this messy distorted market. All right, many indicators will be distorted. The RSI will be distorted. The MACD will be distorted. The slow stochastic will be distorted. Okay, so the market needs to readjust itself, correct itself. Okay, the ultimate goal after distortion is to correct it, bring it back to the starting point. So here, if it's truly bearish, it will stop around the 50% level. Otherwise, it will cancel it completely, the distorted candle. The opposite is also true in a downtrend. All right, it makes sense. Sometimes you see here how the price display this double bottom here. This is a beautiful setup. So you highlight the body and the low. Sometimes, as I show you on the hourly chart or on the daily chart, you will see that the price, instead of going diagonal, you remember what the pattern? Normally we see vertical move, and then we want it to go diagonal. Sometimes it may not do that. It will display instead a double bottom or a double top if you want to sell like this. This is a gorgeous. You must buy here. The double bottom is a validation support level. The double top is a validation resistance level. So distortion, validation support level, or distortion, diagonal move, and common central line is broken. This is the formula to trade, okay, highly volatile securities. Did you get a message? So I want to show you again. I want you to master this so you understand it. So if we want to trade, so today is the non-farm improvement chain. This is the Euro USD. So you will see, okay, just when the economy news is due, all right, if we want to trade before the economy news is released, we will enter the trade 1 minute before the economy news is released. Whether any economy news, it must be a high impact economy news. 1 minute before, we will enter the trade on a 3-minute chart. The trading system that we will use is RTS 315. That's it. This is about trading before the high impact economy news is released. All right. Now, the next strategy. We don't want to trade economy news. We want to wait for the economy news to be released fast. So it's released, volatility, bam, 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 bam. We go, okay, to the hourly chart or daily chart. We'll highlight the body of the candlestick bar as I show you, okay, on a daily chart. This is it, okay, for the Euro Swiss franc. Highlight the body, the high, the low, and the median line of the body of the tall candle, either on the hourly chart or the daily chart. We are waiting for a diagonal move after the distortion or a validation of support and resistance level after the distortion. If we see a diagonal move after a distortion, we wait for the common center line is kaput, and then we sell if you want to sell, and buy if you want to buy. In this case, in normal condition, we will expect this Swiss franc to go diagonal, but it did not. But it gave us a double bottom pattern instead. It's a buy signal. If the price going up, the level that we want to watch, the 50% Fibonacci retracement level, and also the high here, okay, steadily using the trading drill. It makes sense? It is also powerful. This is about how to trade highly volatile securities. Because today is non-farm employment exchange, you can make a decision. If you want to play that strategy, you need to control the risk because it's a highly risky method if you want to trade before the economy is released. All right? So it's not for new traders. It's not for traders that do not want to, okay, lose. All right? If you hate to lose, don't use it. Just stay away. So wait for the economy to be released and then expect a diagonal move or a validation of support and resistance level, and then you enter the trade gently. It may not work for you for the first time. Okay, look at it, test it many times until you master it. All right? Very, very important. Do not just go wow and do something stupid. All right? You want to master it first and then apply it and then see how it works and then okay, take it from there. All right? It works. It's powerful. All right? Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about how to trade highly volatile securities. Speak to you soon.